Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to talk about my two Chinese stocks, so Alibaba stock, Alibaba holding ticker symbol BABA, and JD.com as well, okay, because I had comments in previous videos mostly related to JD asking me, well, are you still bullish now that the stock is actually falling, okay, because Chinese stocks are falling, but also US stocks has stopped as well to go on that parabolic bull case, okay, that we have seen over the past few months. So am I still bullish on JD? Am I still bullish on Alibaba? Or am I gonna sell everything and forget about it? So in today's video, I will explain that. A hint, I'm not gonna sell, okay? So if you were wondering that, that's the answer. But I want to talk about actually what, in my opinion, is happening and what is JD.com valued at right now, because we are gonna take a look at the fundamental analysis and try to understand what is the market pricing now, which in my opinion is becoming quite ridiculous. So the only thing I ask you guys as always is please leave me another like, it's very important and I thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so first of all, as we can see, Alibaba, if you remember from my previous video, here we had the fine. I told you that it was, in my opinion, a positive event, but I also told you in the graph how this yellow area over there was an extremely powerful resistance and that it would have been very difficult to actually Alibaba to pass it in the first place. And we have seen the Alibaba stock actually got rejected completely from that level, bouncing on the 50 moving average over there. And so the market is not, absolutely not strong. We have seen exactly the same with JD.com, even worse than that. Okay, so we had the high in $108 per share back in February to then enter in this negative trend line over there, a pretty clear channel, by basically falling even below the $79 level over there, which was a very interesting support. It's actually also my average entry price on the stock over there. So at the moment on JD, I'm a little bit negative. Now the stock has actually touched around the $72 per share, which is another interesting support. As we can see, it has been strong in the past and it's bouncing back now. Will it continue to fall? Actually, it's possible. Yes, it's absolutely possible. The stock market in the short term, with all of those uncertainties, can do absolutely whatever it wants. Now, what is the problem? The problem is that when we take a look at the fundamental analysis of this, is where actually things are becoming quite silly, in my opinion. Now, first of all, the Alibaba stock fundamental analysis, as you know, I have already shown you in previous videos quite clearly. In my opinion, it should be at least $330 per share in terms of the business. So in today's video, I want to focus more on JD.com, as actually you asked me about that particular stock in the comments below. For the valuation, actually I took the free cash flows margins and the growth rate, obviously, from 2020, that's it, over there, $114.29 billion in revenue, and a growth of almost 38% for 2020 alone. Now, the free cash flow margin, as we can see historically, this is obviously the same business model of Amazon. So obviously margins are low, especially as JD over there was spending a lot building the infrastructure of warehouses. But as we can see, the free cash flow margins went to 4.68% in 2020. To make you understand actually what the market is pricing now, I put that this was just a case, pure luck. The business going on will not scale and actually will lose margins, okay? So we'll lose profitability, come back to 3.5 straight up to 2028, okay? So flat, no scalability, nothing. Then when it comes to the growth rate, actually I said basically the same stuff. 2020 here has been pure luck, okay? Due to pandemic and all this kind of stuff. But then going on in the future, now here analysts first of all are expecting above 22%. I just put 19.8%, and then stuck to 15% until 2024, and then 10%, right, until 2028. So that on average, the growth rate over the next basically 7.5 years is 13.11% for JD.com. Okay, so just forget about that. Forget about the history of the company, what they have achieved back. The company will not do great, it will not scale, it will lose profitability. Forget about the fact that the government is pushing through increasing the spending, okay, increasing the consumer part in China and not only the productive part as they have done basically until a couple of years ago. Just forget about all of that and let's just say that JD will not do great at all. Now, if we take those free cash flows and actually put in the model 11% discount rate, perpetual growth just 3.5%, basically after 2028 JD's revenue will fall to 3.5%, and that's it. The company will just go on with inflation a little bit more. Now, what we have is that with this very, in my opinion, hyper conservative scenario, we have that the fair price of the company should be today $72 per share. Actually, the company is now priced at around 75. So as you can see in terms of fundamentals, what the market is pricing is becoming silly in my opinion. And if we continue with uncertainties and all this kind of stuff, and maybe, who knows, the stock can go even lower than that. But you understand that when you ask me if I am still bullish, well, obviously I am. And the more it goes lower, the more I am bullish, because here valuations can become very stupid in my opinion, because let's say that JD goes to $60 per share. Now, you understand that if you believe in the long-term success of the company and what Chinese are building with their economy, the projections of actually Chinese economy passing the US one by 2028, well, it can go even to, I don't know, $55 per share, but you understand that the uncertainties and all this kind of stuff, the listing issues that are going on right now, is actually what, in my opinion, is creating a huge opportunity for the next 10 years. Now, it's all about that. Clearly, if you do not want to be invested in another country which is not US, if you don't believe in all of that, if you just want to remain in US stocks and that's it, that's fair enough. But here, in my opinion, it is creating an opportunity, this downtrend, driven mostly at the moment not by the businesses, but by threats with the US as well as the monetary policy of China, right? Because the Chinese currency is not strong enough at the moment to actually not depend on the dollar. The fact that the Chinese economy in terms of GDP is forecasted to become the first economy in the world is relevant in my opinion. It is not a coincidence that the United States equity market has been in the recent history the biggest one in the world, because, well, it's obviously correlated to the GDP. The US has been the first country in terms of GDP, so obviously you will have also the biggest equity market in the world. But the correlation with the GDP and the equity market it still exists. Okay, so if China will be able to pass US in terms of economy, well, obviously it is not strange to suppose that also the equity market in China will grow significantly going on in the future. It's all about your time horizon, the patience that you have, what is your investing style. So if you are a trader or if you really want just a couple of years profits and that's it, then maybe those are not the stocks for you. But in terms of a global environment, so the fact that China and Asia overall, but India as well, are forecasted to grow significantly, well, to me personally, I am still fine just allocating a 10-12% of my portfolio in those countries. So that's why I will continue to hold Now, I'm not buying more at the moment simply because the prices are very near to my average fair prices. But if the stock will continue to go lower, JD, but also Alibaba as well, well, I might add some more. Why not? Now, for the delisting issue, guys, I will make another video in more detailed about that issue. But in my opinion, it's not as easy as news medias make it seems, okay? Because if you look at news media, you actually have the fact that the US threats China with this delisting because they do not comply with rules in accounting. Okay, so that's fair enough, but in my opinion, the situation is way more complicated than that. The fact that Chinese economy is forecasted to grow that way, the fact that obviously the stock market will be growing as well, correlated with the economy, even though as of now we just see threats and all this kind of stuff, I do not think that for the US economy and the US market especially, and the US dollar too, is a smart move to delist altogether all the Chinese stocks from the United States market and do not allow them to trade there anymore. Now that, if you think about that objectively, well, it's probably not very smart, because if this is going to happen in the future, it will be very likely that the Chinese market will grow substantially and lots of investors all over the world will want to join that growth. Okay, especially if China will be able to be more transparent in what they're doing and actually increase the trust in foreigners investors. Now, if all of that happens, clearly having Chinese stocks traded in the US, first of all, allows the US to make lots of money with just fees and businesses. Okay, so investment banks, all this kind of stuff. But then if you buy Chinese stocks in the US, you are still using the dollar. But if you don't allow that anymore, and if investors flow to China with capital, actually they are using the Chinese money, the Chinese currency. And that is not something smart, in my opinion, to do for the United States, considering also the huge amount of debt that they have as of now. One of the biggest threats as of now for the US is to lose the dollar as a global currency reserve. Okay, so if you allow lots of people to flow to China because you deny the access to invest in it in the US, in my opinion, it's not something easy, it's not something smart, it's something that, even though it looks like a threat right now, but if you look at it objectively, in my opinion, the US do not have the incentives to delist altogether all the Chinese companies. Maybe the shadiest ones, okay? That's absolutely fair enough. But for companies like Alibaba, for companies like JD, in my opinion, I am not much worried about that. And also, if you take a look at Charlie Munger, for example, he bought millions in Alibaba through US listed stocks. So as it seems, he's not worried too. Now, obviously, that's just an idea, so could be completely wrong, but that's what I think. So just to answer those comments, well, I am still bullish, and over the long term, I do not have any problem having a percentage of my portfolio invested in those two Chinese stocks. Okay, so I hope you find the video interesting, guys, and leave me a comment down below. Actually, tell me what do you think about that. Will they continue to fall going on in the future? What's your opinion on Alibaba stock and JD? Subscribe to the channel if you want, and as always, guys, have a wonderful day.